Yo, ladies and gentlemen, what is happening? All right, then. So here is a pre-market update so that you guys are aligned with what we can expect moving forward. What's happening on the street, ladies and gentlemen? Now, listen, this might look like I'm giving you news about what's going on in the marketplace. True. But it's the information that we get when we go over to the charts, we can learn to understand and exploit. You see, the average person will come and watch the news and think, oh my God, that's doom and gloom. Okay? But more importantly, as a trader or an investor, you can utilize that as an opportunity to try and exploit this situation for profit. So take what you can from this, ladies and gentlemen. All right? Now let's get with this flavor. Bitcoin. What do we know? Bitcoin's moving down. All right? We've got a lot of imbalances in Bitcoin that will need to be realized. And we have one in particular around the 18,655 zone, which was the last rebound from its lows from last week. Now listen, the word across the street is this. Investors are hunting for the bottom. Some of the greatest stock traders that you see on Twitter, still alive today, will say that they didn't make their career on bottom fishing. Well, what does that mean? It means that you think that the market's going to turn back up. You think that there's that much negativity going off in the marketplace that it has to come back up. Not in this game, ladies and gentlemen, all right? It will always happen when you don't expect it. Now, the market always factors the future in price. Now, we've got a couple of things that are causing a little bit of a cause for concern. Like I said, I'm waiting for that Black Swan event. I want that event to happen where the market just takes an absolute nosedive and completely shatters the logic of any idea of price going back up again. And you'll usually find that in the past, every time a market turn has happened, it has always come straight after a big event. This problem with inflation is a progressive event. We've got a problem in the UK. Mortgages. The lenders are going to incur up to £52 billion worth of costs because of the increase in interest rates. People are going to default on their mortgages. That's a problem for these mortgage lenders. All right? We've got uncertainty with the gilts, which is like the US equivalent of bonds for the UK. And those keep on flying up and down. Bonds in the US and bonds in the UK itself, ladies and gentlemen, they need to be at a level zone. Okay? Need to be moving up and down nice and slowly so that we understand that investors, when they distribute their portfolios between stocks, commodities, and bonds, that there is now an even distribution of, how can I put it to you? We're all on the same page, okay? I'm cool at putting 60% of my portfolio into stocks and commodities, and I've got 40% of my portfolio sitting in bonds. If the bonds are doing all good, I'm generating a low risk return on my bonds. So that's helping my portfolio diversify if there's anything going off with my stocks, which is making up the most of my portfolio. But that's all flip-sided, ladies and gentlemen. There are more guys coming to the yields now, especially in the US, and there's continuous uncertainty in the UK, which is why the yields, the gilts, the gilts in the UK are flying up. There's no control. That's why the Bank of England has taken a step back, because they need the gilts to slow down by themselves. In other words, participants picking up the UK bonds itself need to just start calming down. All right? Now, we've got Truss trying to declare to Parliament that she's trying her best and she ain't going to go down without a fight. All right? And she ain't exactly had the greatest term so far. Now, all this information, why is it relevant for us? Well, look at it like this. Let's go back to the basics. Bitcoin follows the S&P. We're in agreement with that. Cool. So, if the S&P is going to drop, Bitcoin's going to drop. All right? But what's actually happening right now is, going back to what I said about the bottom fishers, there are people, investors, trying to find that point. Now, if you look at this chart right here, ladies and gentlemen, you can see the attempts by the S&P trying to go up and price comes down. Goes up, price comes down. It's all psychological. Think of it like this. If the market maker is going to supply the opportunity for people to buy and sell, where is he going to grab the most interest? Check this out. In front of you, ladies and gentlemen, you have Bitcoin, all right? And you can see how during this move to the downside, ladies and gentlemen, Bitcoin, let me just get rid of this. This is like a little VWAP right there. You can see that every time Bitcoin moves up, it's met with an aggressive move down. Cool. Up, down, up, down. Because what's the narrative? The narrative is that there is concern, inflation, conflict. We need to make sure we've got that in our minds all the time, because when we get excited about a move up in Bitcoin, it's not moon boy time, ladies and gentlemen. It doesn't go like that. All right? So whenever we see a move by Bitcoin to a specific point in the chart, we can correlate the idea of the hybrid system, but more importantly, we need to take into consideration the macros of the bigger investors. Where are they moving their money? Now, principally, if you were to dismiss the idea of macros, okay? Now, I kind of dismiss the idea of macros, but I'm a scalper. So I'm in and I'm out, okay? And for the macros to take effect, I've closed my trade. Now, for the swing trader, he can utilize the concept of macros, but he has to make sure that he uses enough position size to allow the idea of price shooting up and then coming back down. All right? Look at Bitcoin on the 800 EMA. It just seems to love this position. Always sells up from above that point and then drops to the downside. So Mr. Market Maker knows he grabs people's attention because people trade these moving averages and they set orders above the 800 EMA in the hope that if it can break the 800 EMA, it's going to continue. Why? Because it's a big EMA. All right? Now, EMA stands for exponential moving average for anybody new to the channel and new to trading completely. All right? So when we look at this chart right here, ladies and gentlemen, we assume to ourselves, okay, look, Bitcoin's trading lower. It's going down towards the psychological high. And this is the last point in Bitcoin where they could move back up if the interest inside of this region right here comes into play. If it doesn't, you know what the story is, ladies and gentlemen. The next point of interest in the chart is the psychological low. Why? Because that's the last point that the market had established, the low at the start of the week where Mr. Market Maker had built his positions to the downside to initiate the move back up. Now, you've got to be mindful, ladies and gentlemen. Check this out. What is Bitcoin doing all this behavior around? Again, the key whole and half number principle. Mark off the 19,000 zone on your chart, then mark off the 19,500 zone on your chart. Look at the relationship between these two regions. They've moved up towards this zone, resistance at the 800 EMA, and they keep spiking up, pulling it down, spiking up, pulling it down. Traders are frustrated. Look at the high block. Look at these pools of liquidity right here, ladies and gentlemen. This is Bitcoin, Binance Futures. You can see that we have got $5.5 billion worth of long liquidations sat at the 18,900. Is Bitcoin close to that? Yeah? 18,900, sorry. That's where it is right there. So Mr. Market Maker will think to himself, okay, hold on a second. I can get longs filled in and around this region right here. But I'm also closing my shorts from the previous move above the key 19,000 zone. Look at how many shorts they built in this area. Getting shorts filled at the highest possible point, rip to the downside, retrace back up, do exactly the same thing, and rip it even lower. So principally, we would anticipate that if Bitcoin does break, it's going to aggressively tap the 19K zone. And if it manages to eat that liquidity at 18,900, ladies and gentlemen, guys in longs will have to pay the price. And that is the truth of the game. Check this out. Dollar dominance. What's the story there? It's going up. Okay? The projection that I shared this morning to the patrons of the channel gave them the understanding as to why the dominance of the dollar was going to start to move up because of the imbalances in the chart. Remember, dollar dominance is all about why investors will transact on the dollar, because we've got inflation, the yields are going up, and people are concerned. So naturally, the safest bet right now is the dollar, because even if you weren't to pick up the dollar from its move to the upside from before, even look, 12% appreciation on the dollar itself, you're laughing. All right? It pays to hold dollar. And the first video at the start of this week, ladies and gentlemen, was dollar is king. We keep going back to this narrative. Okay? They were setting up the move, ladies and gentlemen. Setting it all up for price to come back to it. They stabilize at these lows right here, and then they shift out to the upside. What a story that is. All you've got to do, ladies and gentlemen, is focus on the yields and the dominance of the dollar. That's all you need to do. And nothing else matters, because any asset against the US dollar is going to go down when the dominance of the dollar goes up. And then when the dollar dominance goes down, any assets against the US dollar are going to shoot up. All right? Go to Euro USD, which makes up 55% of the dominance of the dollar, ladies and gentlemen. Where's Euro USD? Happy days. Check this out. Rolling over. A nice rollover in Euro USD. Now, let me tell you something. When I set up my charts, 90% of the time, I'm paying more attention to the way the candlesticks behave as opposed to looking at key zones of support and resistance, all right? I'm not going to be the trader. Where is it? Let me move that there. I'm not the trader that says, okay, I've got a support zone or a resistance zone here, and I have got a support zone right here. Okay. I'm not that guy. Okay. The reason I'm not that guy is because I want to be in the move before it gets to that point. I want to be in the move before it gets to that point. More importantly, this point is designed to trap traders because they believe that this is a support zone. It's got nothing to do with it. The way you've got to look at it, I'm not dismissing it because it does work for traders. There are traders out there that do exploit it. I'm talking from a smaller time frame perspective, and the amount of times that I have witnessed these sort of boundaries being set in charts and people expect them to play out. Now, sometimes they do, but in my experience, I've seen that they are great at setting traps. Just look at this. Imagine you had assumed that this was the high on this move to the upside right here. Okay? Oh, it goes up, breaks it. You've now gone long because it's broken resistance, and old resistance becomes new support. Happy days. So price moves up. Then what does it do? Comes straight back down aggressively. Well, at that point in time, the traders who believed that that was old resistance becoming new support would have traded that narrative. Plus, you had the confluence of the 800 EMA coming into play. But then when I look at the hybrid system, I'm paying attention to this story and I'm seeing 3 hits to the high, a stop in volume candle, which is a red vector up there, and the 800 EMA telling me that market maker wanted to prevent price from going any higher because he had already set the precedence for his short to get realized at a later point. In other words, if he allows liquidity to go higher in the chart, ladies and gentlemen, then that means all the guys that went long right here are going to realize a nice return and they're going to pay themselves. And Mr. Market Maker, of course, hasn't got the liquidity or what we would understand to be the liquidations in the chart for him to go back and take that liquidity to match up against his shorts that he's been building beforehand. Sounds like it's a little bit of a crazy discussion right there, ladies and gentlemen, but that's the nature of the way the game works, all right? Let me just quickly go over to the yields themselves, ladies and gentlemen, before the New York session. Now, listen, usually the idea is, oh, there you go. Yields are moving up. And this was the region that they were breaking away from, this consolidation zone right here between 4 and 3.867. This was where they've been consolidating for the past couple of days, all right? And prices of assets across the board have been moving up and down. But what you want to be aware of, ladies and gentlemen, is you want to see the yields stabilize. If they kept it at this level right here, then that would be an idea or a logic that the yields could be peaking out, but we still haven't got the big move yet, all right? There's still a lot of speculation about what the Fed's going to do with the interest rates, which is naturally leading the yields to climb up, okay? When yields go up, futures go down, prices go down, all right? I hope that helps you, ladies and gentlemen, puts things into perspective for you, okay? Remember, without even looking at the charts, we know what the narrative says. Dominance of the dollar has been going up since Asia, and it's been going up during the UK session. We know that the US session itself is notorious for its stop hunts, okay? So remember, price can shoot up and it come back down to only come back up again. And it can do the reverse of that as well. It can shoot down to go up to go back down again, all right? Get in your charts, the yields, US 10-year. Get the dominance of the dollar chart, which is Dixie. Have those two asset classes up and then the asset that you want to trade on the other side of it as well. And monitor it. Watch Bitcoin, watch Ethereum, watch Euro USD, watch the NASDAQ, S&P, all right? But keep dominance of the dollar and the US 10-year on your charts because you will then be understanding the utility of big money going into the yields or coming out of the yields. The yields will drop, okay, once investors are feeling a little bit optimistic. Now, they are calling for a move up, ladies and gentlemen. So if you do manage to exploit that, pay yourselves. Take the money and run. Because not everything can keep going up. Not everything can keep going down. All right? I hope this video helps you. Mad love and respect. Be sure to like and subscribe if you are new to the channel. And I'll be checking in with you all later on tonight. Take care of yourselves, gang. Peace.